Joining me now at Post 9, Gabriela Santos, Chief Strategist for JPMorgan Asset Management. Welcome back. It's nice to see you.
Good to see you.
What does the chief strategist have to say the best strategy is right now?
So we've been getting asked, I would say, two major types of questions. The first one really centered around where are we in the here and now in the economy. There's this macro ping pong going on all year. And the other one is more related to long-term themes. Is AI overhyped? Are there different ways to play it? Are there different themes going on in the market? In terms of the here and now, we find it very much a good strategy to not get caught up in this shifting narrative, but really to look at a combination of data and see that there's a slowdown happening in the economy, but there isn't a tumbling happening at the moment. It's more of a normalization in the pace of growth, normalization of inflation, and a start to normalization of rates. And then in the long term, to pair some of the cyclical risk-on positioning with particularly leaning into areas of long-term conviction. We don't think AI is overhyped. We don't think this is a Cisco moment. It's just that there's an important broadening out that's starting to happen of the winners of that theme. And one of the big ones that we see as an intersection of AI and other themes is healthcare. And we really want to make sure we don't forget other themes as well.
But it sounds like you think it's maybe a little too early. We had a debate to start our program, and it seems to be the debate. Top-heavy market, whether it's going to finally broaden. I don't feel like you suggest you really believe in this broadening, at least now, right? You make the distinction near term, longer term.
So I think sometimes the broadening is interpreted as a rotation, as the early winners losing out at the expense of completely different themes. And I think really what we mean by broadening is more an expansion of the winners at the same time that some of those large cap, mega cap tech continue to do well as well. And this is where I think it's really important to see that we have started to see some broadening of the AI beneficiary theme. So what's the whole compute going into data centers? There's a whole variety of semiconductors and semiconductor supply chain providers that can do well. Taiwan is up 33%. That's another way to play the compute power of data centers, as well as the hard infrastructure and energy required. Utilities seeing some love again, for example.
Sure, but I don't hear you making an argument away from the AI conversation. Yes, I mean, you're still talking in large pockets about the growth trade, just different levels of it. Now, I'm not putting utilities into that, obviously, but that's primarily where you see the best opportunities still.
But I think, yes, related to this long-term theme where we have conviction, it's not, cyclically moving up and down. It's very much the early adoption investment phase. But that includes companies that are found in the U.S. and overseas, companies that are found in your traditional tech and in utilities, in industrials. And we're also making a related but separate argument to focus in on what's happening in healthcare. This is partly a key beneficiary of AI, and unrelated, it's also the other big disruptive theme that's happening, which is GLP-1 drugs. And that's one where I think is very much underappreciated recently on performance and valuation.
But you think it's not the right time for value?
Not the right time to go all in on this big cyclical kind of investment theme.
When is the right time?
I think it's when growth is re-accelerating. And we're at a phase where growth is good, but it's decelerating. And especially in a sector related to the consumer. So that's one pocket where we're cautious. Consumer discretionary, consumer staples. That's the one that's seeing the negative delta, the deceleration.
Do Fed rate cuts solve that problem or not necessarily?
I think not necessarily. It certainly puts a floor on consumption if we get going sooner rather than later, and then we maintain this pretty good enough kind of jobs market. But it alone doesn't preclude this normalization of consumption. And that's ultimately where we're speaking of. But the market cares about the delta. And so the consumer is one that we're still have our eye on. It's also not the time, we think, to make big cyclical investments like overweighting value versus growth, overweighting small cap versus large cap, or weighting regionals versus large banks. There'll come a time for that eventually when growth re-accelerates. I'm
going to ask you the same question I asked our top two guests today to start the program. 3-4 weeks from now, we're saying what about earnings season? Did it live up to the hype? Did it do what it had to do? Or are we saying, well, here's some cracks that we need to pay attention to?
So it's really interesting. I'm so excited we're getting back to the actual earnings bit of the equation. I do think 3-4 weeks from now we'll start talking with much more conviction about a certain broadening out that's happening in earnings growth. And that includes sectors that are tech-related and AI-related, but also other sectors that can be getting some of that boost or that have bottomed enough. And that's where we go back to this idea of utilities, industrials, as well as certain parts of energy.